India's startup ecosystem has quickly evolved into one of the world's most dynamic, largely fueled by supportive government policies aimed at nurturing new businesses. With numerous programs offering financial aid, mentoring, and simplified regulations, entrepreneurs have more opportunities than ever to bring their ideas to life. But with so many schemes available, identifying the right one can be overwhelming. In this video, we'll uncover the top government programs specifically designed for startups, discussing their benefits, eligibility, and featuring success stories of companies that have thrived under these initiatives. Welcome to the AI Lib. Launched in 2016, the Startup India Initiative is a flagship program designed to provide an enabling environment for startups to flourish. With a wide range of incentives, including tax benefits, funding opportunities, and streamlined regulatory processes, it aims to reduce the barriers for entrepreneurs. One of the key features of this initiative is a 3-year tax holiday for eligible startups, allowing them to reinvest profits into their business without the burden of income tax. Additionally, there are capital gains tax exemptions and provisions for easier exits, making the entrepreneurial journey smoother. The program's eligibility requirements are straightforward. The company should be a private limited company, registered in India, and not older than 10 years. Its annual turnover must not exceed 100 Indian rupees crores, and it should be working on an innovative product, service, or process. These criteria aim to attract a wide array of businesses, from tech startups to social enterprises, fostering a culture of innovation across sectors. Several startups have seen remarkable growth under this program. CureFit, a company focused on fitness and wellness, utilized the tax incentives to channel funds into expanding its services from offline fitness centers to digital health consultations. Similarly, Dunzo, an on-demand delivery service, took advantage of the initiative's funding ecosystem to raise capital and expand operations across multiple cities. Another standout is Fresh to Home, an online fresh fish and meat retailer that has been able to raise substantial funding by leveraging the visibility provided by the initiative. The Startup India Initiative also supports startups through the Fund of Funds, which is managed by the Small Industries Development Bank of India, SIP-EIT, with a corpus of 10,000 Indian rupees crores. The fund provides equity funding support to startups, allowing them to raise capital at various stages of growth. More than just financial support, the initiative includes programs like the Startup India Yatra, which travels to different states to spread awareness and help regional startups connect with resources and networks. Since its inception, over 92,000 startups have been recognized under the initiative, creating more than 7 lakh jobs. The program has also led to the establishment of more than 45 incubators and accelerators across India, offering crucial mentoring and growth support. The Micro Units Development and Refinance Agency, Mudra, loans program was introduced to address the financial needs of micro and small enterprises, which often struggle to access formal credit. Mudra loans are offered under 3 categories: Sure, up to 50,000 Indian rupees; Kishore, from 50,001 Indian rupees to 5 Indian rupees lakhs; and Tarun, from 5 Indian rupees lakhs to 10 Indian rupees lakhs, catering to businesses at different growth stages. The scheme is particularly beneficial for startups and small enterprises that need funds for working capital, equipment purchases, or business expansion but lack substantial assets for collateral. One of the most appealing aspects of the Mudra scheme is its accessibility. Minimal documentation requirements and the absence of collateral make the loans attainable for a wide range of entrepreneurs. The program has also introduced financial literacy initiatives to help entrepreneurs better manage loans and investments, ensuring that the funds are used efficiently to maximize growth potential. An example of a startup that successfully utilized Mudra loans is Shop Kirana, a B2B e-commerce platform that connects small local retailers with manufacturers and distributors. The company used Mudra funds to strengthen its supply chain infrastructure, allowing it to expand into smaller cities and scale its operations. The loans facilitated the purchase of new delivery vehicles and helped upgrade its inventory management systems, significantly improving operational efficiency. The impact of the Mudra program has been immense, with more than 15 Indian rupees lakh crores disbursed to date. The scheme has supported approximately 28 crore beneficiaries, primarily in rural and semi-urban areas, where access to traditional bank loans is limited. The financial assistance provided through Mudra has not only enabled business growth, but also contributed to economic development by promoting job creation in the microenterprise sector. The Atal Innovation Mission, AIM, was launched to create a vibrant ecosystem that nurtures innovation and entrepreneurship across all sectors of society. It focuses on promoting a culture of creativity and problem-solving from a young age, while also providing incubation support to startups. AIM includes several flagship programs, such as the Atal Tinkering Labs, ATLs, which introduce students to emerging technologies like artificial intelligence and robotics, and the Atal Incubation Centers, AICs, which provide funding, mentoring, and business development support for early-stage startups. The ATLs, which number over 7,000 across the country, equip schools with cutting-edge tools and technologies, encouraging students to learn through hands-on experimentation. By fostering a mindset of innovation at an early age, the initiative aims to create a future workforce that is skilled in tackling complex problems. Meanwhile, the AICs offer up to 10 Indian rupees crores in grants to help establish world-class incubation centers that nurture young companies with high growth potential. A success story from AIM is Niramai, a health tech startup that developed a novel, non-invasive breast cancer screening tool using artificial intelligence. The company benefited from grants for R&D and support from an AIC, which helped accelerate product development and clinical trials. Similarly, Bionic Hope, a startup focused on affordable prosthetics, utilized the incubation support to refine its bionic limb technology, making life-changing devices more accessible to people with disabilities. The mission's collaborative approach, which involves partnerships with private companies, universities, and international organizations, ensures that startups receive holistic support. By bridging gaps between academia, industry, and government, AIM creates a nurturing environment for young entrepreneurs. The initiative's broad reach extends beyond the tech sector, promoting innovation in fields like agriculture, healthcare, and energy. The Credit Guarantee Fund Scheme for Startups, CGSS, is specifically designed to help startups access credit without requiring traditional collateral, which can often be a significant barrier for new businesses. The scheme provides a guarantee cover of up to 2 Indian rupees crores for loans extended to eligible startups, with the government covering 75% to 80% of the loan amount based on the risk profile. This risk-sharing mechanism incentivizes banks and financial institutions to lend to startups, thus enhancing credit flow to young companies. Startups from diverse sectors, agriculture, technology, manufacturing, and even creative industries can benefit from this scheme. AgroWave, an agritech startup focused on optimizing the supply chain for fresh produce, secured funding under CGSS to expand its logistics network and improve the quality of services offered to farmers. This financing allowed the company to reduce post-harvest losses by up to 25%, benefiting both producers and consumers. CGSS has also supported startups that specialize in renewable energy, with several companies using the funds to invest in green technologies. For example, SunSource Energy, a solar energy startup, leveraged the scheme to finance the installation of solar panels for rural electrification projects. This not only helped the company grow, but also contributed to India's renewable energy targets. The program has had a significant impact on the startup ecosystem, with more than 1,000 companies securing loans under the scheme by the end of 2023. The total amount of credit guaranteed exceeded 6,000 Indian rupees crores, highlighting the scheme's role in boosting confidence among financial institutions to support new ventures. The Stand Up India scheme focuses on empowering women and scheduled castes, SC/scheduled tribes, ST, by providing loans ranging from 10 Indian rupees lakhs to 1 Indian rupee crore for setting up greenfield enterprises. The scheme aims to promote social and economic inclusion by enabling marginalized communities to participate in the entrepreneurial ecosystem. Loans are provided for businesses in manufacturing, services, and trading sectors, and borrowers receive additional support in the form of training, mentorship, and guidance throughout the loan application process. To apply, an entrepreneur must be at least 51% involved in the day-to-day management of the business. The scheme also requires that the borrower is a first-time entrepreneur, encouraging new business ownership among underrepresented groups. The repayment term is set at 7 years, with a moratorium period of up to 18 months, giving startups time to stabilize before starting loan repayments. A notable example of success under this scheme is Jutpat Logistics, a logistics company founded by a woman from an ST background. The startup used the funding to acquire vehicles and develop a robust logistics management system, allowing it to serve customers in rural areas. Another inspiring story is Mira Foods, a food processing startup owned by a woman entrepreneur from a scheduled caste community, which utilized the Stand Up India scheme to purchase modern equipment for its factory, expanding its product line and reaching new markets. Since its launch, the scheme has sanctioned over 1.5 lakh loans, with a cumulative disbursement of more than 36,000 Indian rupees crores. By providing financial support to historically marginalized communities, the Stand Up India scheme is fostering a more inclusive economic landscape in the country, driving job creation and uplifting underrepresented groups. The Pradhan Mantri Mudra Yojana, PMMY, was launched to provide financial assistance to non-corporate small businesses, offering microfinance solutions categorized under Shirshu, Kishore, and Tarun. The scheme helps startups secure loans for various business needs, from working capital to expansion, supporting sectors such as manufacturing, food processing, and services. The government's push for banks to refinance these loans has resulted in favorable interest rates and flexible repayment terms for borrowers. The PMMY scheme has supported startups at the grassroots level, enabling them to grow without significant capital constraints. Paperboat, a beverage startup known for its traditional Indian drinks, used PMMY loans to scale its manufacturing capabilities, setting up new production lines to meet rising demand. Since the program's launch, it has disbursed over 14 Indian rupees lakh crores, benefiting more than 30 crore micro-entrepreneurs and creating numerous employment opportunities in rural areas. The PMMY's impact extends beyond financing. It empowers small businesses to formalize, helping them access additional government benefits such as subsidies, training programs, and even export incentives. The support for international patent protection in electronics and information technology SIP-EIT scheme is designed to help Indian startups secure international patents, protecting their technological innovations on a global scale. This initiative aims to reduce the financial burden associated with international patent filings, covering up to 50% of the costs incurred, with a cap of 15 Indian rupees lakhs per invention. Given the high cost of obtaining patents in multiple countries, SIP-EIT serves as a vital tool for startups to protect their intellectual property, IP, which is crucial for maintaining a competitive edge in global markets. The eligibility criteria for SIP-EIT require the applicant to be an Indian SME or a startup engaged in research, development, and production in electronics and IT. Companies must also demonstrate the novelty and technical merits of their innovation to qualify for funding. This scheme has been particularly advantageous for startups in sectors like semiconductor technology, artificial intelligence, and telecommunications, where IP protection is essential to attract investors and partners. An example of a startup that benefited from the SIP-EIT scheme is Signal Chip, which developed India's first homegrown semiconductor chip for 4G LTE and 5G networks. With the help of SIP-EIT, Signal Chip was able to file patents in multiple jurisdictions, ensuring the protection of its core technology from competitors. This not only secured the company's innovations, but also added value to its intellectual property portfolio, making it more attractive to investors. The SIP-EIT program has played a significant role in enabling Indian startups to go global by protecting their innovations in international markets. By encouraging companies to secure IP rights, the scheme fosters a culture of innovation and technological advancement, positioning India as a key player in the global electronics and IT sectors. The NewGen Innovation and Entrepreneurship Development Center, NewGen IEDC, scheme supports academic institutions in creating an environment conducive to innovation and entrepreneurship. With funding of up to 25 Indian rupees lakhs per project, this scheme encourages students and faculty to transform their ideas into viable business ventures. The funding can be used for various purposes, including prototype development, product validation, and initial commercialization efforts, making it easier for young innovators to bring their projects to market. NewGen IEDC places a strong emphasis on collaboration between educational institutions and industries, enabling students to work on real-world problems and develop market-ready solutions. This approach helps bridge the gap between academic research and commercial applications, fostering a culture of entrepreneurship within educational institutions. A prime example of success under this scheme is Ather Energy, an electric scooter startup founded by IIT Madras alumni. The company used NewGen IEDC funding to develop its initial prototypes and test the feasibility of its electric vehicles, laying the foundation for its future growth. Today, Ather Energy is a prominent player in India's electric vehicle market, known for its cutting-edge technology and commitment to sustainable mobility solutions. By empowering students to take entrepreneurial risks and providing the resources needed to commercialize innovations, the NewGen IEDC scheme plays a crucial role in nurturing the next generation of Indian entrepreneurs. This initiative not only supports startups emerging from academic institutions, but also contributes to India's goal of becoming a global leader in innovation and technology. The Venture Capital Assistance Scheme, VCAS, is an initiative designed to help startups in the agriculture sector meet their equity requirements for setting up or expanding projects. The scheme provides up to 26% of the promoter's equity or 50 Indian rupees lakhs, whichever is lower, thereby helping agri-entrepreneurs secure the necessary capital without having to dilute ownership significantly. This scheme is instrumental for startups engaged in organic farming, agritech innovations, and sustainable agriculture practices, as it promotes investment in new agricultural projects. The VCES funding can be used for various purposes, such as acquiring agricultural equipment, setting up processing facilities, or expanding distribution networks. The support enables agritech startups to innovate and scale, making agriculture more efficient and sustainable. Farmazon, an agri-startup that offers organic farming subscriptions, utilized VCAS to expand its farm network, allowing urban customers to lease plots of land to grow organic produce. This not only increased the availability of fresh, pesticide-free food, but also empowered local farmers by providing them with an additional revenue stream. Another notable example is Dahat, which used VCAS to fund its expansion and provide end-to-end agricultural services, from seed distribution to market linkages, thereby supporting over 700,000 farmers. The VCAS scheme has helped over 2,000 startups since its inception, providing more than 500 Indian rupees crores in financial support. By reducing the capital constraints faced by agri-entrepreneurs, the scheme is playing a key role in promoting sustainable agriculture and improving farmers' livelihoods. The Digital India Initiative is a government-led effort to transform the country into a digitally empowered society and knowledge economy. Launched in 2015, the initiative aims to promote digital infrastructure development, foster digital literacy, and encourage the use of digital technology across various sectors. For startups, this initiative offers incentives for digital payment adoption, cloud computing, and even e-governance, opening up new avenues for growth and innovation. Startups in fintech, edtech, health tech, and e-commerce have particularly benefited from this initiative. Paytm, a fintech company, is one of the most successful examples, leveraging the Digital India push to rapidly scale from a mobile wallet to a comprehensive financial services platform. The initiative's focus on promoting a cashless economy created a favorable environment for Paytm, allowing it to gain a massive user base and diversify into areas like digital banking, insurance, and wealth management. The Digital India Initiative also emphasizes expanding internet connectivity across rural India, enabling startups to tap into underserved markets. Practo, a health tech startup, benefited from the initiative by expanding its digital healthcare services, making online consultations and medical records more accessible to the public. By promoting the adoption of digital technologies and ensuring that the benefits of digitization reach all corners of the country, the Digital India Initiative has paved the way for countless startups to thrive, making India a global hub for tech-driven solutions. The Biotechnology Ignition Grant, BIG, is an initiative by the Biotechnology Industry Research Assistance Council, BIRAC, to support early-stage startups in the biotechnology sector. The grant provides funding of up to 50 Indian rupees lakhs for proof-of-concept research, prototype development, and other early-stage activities. The goal is to de-risk biotech projects and help startups validate their technologies before seeking large-scale funding. The BIG scheme supports startups working in diverse fields such as biopharma, agriculture, industrial biotechnology, and medical devices. The funding helps startups cover critical costs related to R&D, product development, regulatory compliance, and clinical trials. By providing financial support for high-risk, high-reward projects, The scheme encourages biotech entrepreneurs to tackle some of the most challenging problems in healthcare and agriculture. One notable success story is Pandorm Technologies, a biotech startup focused on developing 3D printed human tissues for medical applications. With the help of the big grant, the company was able to complete crucial research and advance its technology towards commercialization, making significant strides in regenerative medicine. Another example is Ather Energy, which used the grant to develop seaweed-based products for sustainable agriculture and biofuels, contributing to a greener economy. The BIG program has supported over 500 startups and awarded more than 250 Indian rupees crores in grants, fostering a vibrant biotech innovation ecosystem in India. By enabling startups to undertake groundbreaking research, the scheme not only advances scientific knowledge, but also has the potential to improve public health, agricultural productivity, and environmental sustainability. So, what do you think? Do these government schemes provide enough support for startups to thrive, or do they still need to be improved? If you enjoyed this video, please give it a thumbs up, subscribe to the channel, and hit the bell icon so you don't miss any future updates. Check out the videos appearing on your screen right now for more insights and stories from the world of technology. This is the AI Lib. Stay tuned.